Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from Rivian, the electric vehicle company. Get ready for a financial ride because it looks like they just unlocked a huge chunk of change. We're going to break down where that money came from and where it might be headed and its consequences. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. This is a Form 8K report, which is basically a snapshot of significant events that a company wants to tell its investors faster than their usual quarterly or annual reports. It's like a financial breaking news alert. In this case, it's about money that changed hands and an update on how many vehicles they produced. Let's talk about the big news first. Volkswagen Group, or VW, is investing $1 billion into Rivian. This is part of an agreement they made back in November of the previous year. This investment was waiting for Rivian to hit a financial milestone, basically a target they needed to reach to prove they were worth the money. On June 30 of this year, Rivian got the $1 billion from Volkswagen. In return, Rivian issued VW a whole lot of stock, over 51 million shares to be exact. The price VW paid per share was about 1942 shins, which is a significant jump higher than Rivian's average stock price in the previous month. The average price was just around $14.66, so VW paid a premium, meaning they paid more than the going rate. This could signal that VW sees long-term value and potential in Rivian. They believe the company is worth more than what the market was valuing it at previously. This stock sale was done under a special rule that allows companies to sell stock without having to go through all the usual registration paperwork. This rule is for deals that don't involve a public offering, meaning it was only offered to a specific investor, in this case Volkswagen. Okay, let's switch gears. Rivian also announced how many vehicles they made and delivered in the last 3 months, ending in June. This kind of information is closely watched by investors because it tells us how well the company is actually doing at producing and selling cars. The report mentions a press release with the specific numbers. These are usually released at the beginning of the following month, so in this case, July 2nd for the quarter that ended in June. We don't have the exact production or delivery numbers in this filing, but it's safe to assume the market will watch closely to judge Rivian's performance and how they're doing against the predictions. The press release gives more detail on the vehicle production and delivery numbers. This press release is officially included as an exhibit to this report. So if you want to see the exact numbers, you can find them there. Now, let's take a step back and look at the general direction of Rivian and the risks in the road ahead. Volkswagen's $1 billion investment is a huge vote of confidence. It gives Rivian more financial flexibility. However, Rivian still needs to prove it can ramp up production, manage costs, and deliver vehicles efficiently. The numbers in that press release we talked about are critical. The electric vehicle market is also getting more competitive. Tesla already has a big lead, and traditional automakers are jumping into the electric game. Rivian needs to find its place and show that its trucks and SUVs are worth the premium price. Volkswagen's investment brings both opportunity and risk. If Rivian can execute its plans well, this partnership could be a game changer. If not, Rivian could face some tough times. Alright, that's our breakdown of Rivian's latest 8K filing. What's your take on this investment and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.